May profits be upon you. This is part 2 of the weekly Forex forecast. In this video, we're going to cover NASDAQ, S&P, Dow, crude oil, gold, silver, and we are not covering Tesla. No. We'll cover the others. All right, here we go. Let's just jump into it. Why don't we just jump into it? If I could just figure out how to do this. Okay, wait a minute. There you go. All right. Okay. Now, looking at the monthly, we're gonna do this top down. All right. We're looking at the monthly, and what you can see is price has taken out the all-time highs. Right. Boom. And a nice bullish close. Price traded through the swing high, pulled back. All right, into a fair value gap, a thin one, but fair value gaps are fair value gaps, and they need to be rebalanced. That's it. All right. The size really doesn't matter. All right. The size, it really doesn't matter. It's other factors that you want to look at, and I'll go over it. Anyway, price moved up, took out the swing high. All right. But did not trade through. The next candle, it traded through. All right. This is the month of June, and it's already taken out the high. All right. It's already taken out the high. It's bullish so far. There's no other way to look at that. We got a bullish month going so far. Now, we're going to look at the weekly. And in the weekly, you can see my little notes. All right. You can see that price has taken out this swing high, pulled back, and then took out that swing high. Price pulled back into a fair value gap and responded bullishly, taking out the previous high, the old high, and closing pretty high with a moderate size wick on top. So again, we are bullish. All right, there's nothing bearish about this. All right, the only thing that one would take as would take a pause on buys on buying or going long is because we're at these all-time highs, and when you take out swing highs, you expect some kind of pullback like this one did. All right, like this one. All right, once we hit those highs, we don't want to keep taking buys at the high of it. Wait for the pullback, and then you can take a buy, but you wait for valid setups, right? Okay. We go to the daily. On the daily, we have bullish price action. You can see this was Wednesday's candle, and it was a big one, right? And then we have Thursday and Friday. Friday left the doji, but Friday took out the high and the low of the previous day's candle. All right, we tapped into a bullish fair value gap, and I'm expecting prices to go higher from here. All right, you see how the market structure shift intersects the bullish fair value gap. That gives it some more confluence that price will be a good support here and go higher. All right, if we go to the S&P, we're going to see a similar situation. All right, we have the old-time highs over here, and then price takes it out, does not trade through it, but just sweeps it for liquidity, again, sweeps it for liquidity, but we're not trading through that price. Now, we have traded through that level, but we didn't trade through the high, the new high, not yet. Okay, so what are we looking at? Price pull back into the fair value gap that was created. This is a very good institutional candle, right? We take out the previous highs, and then the next day high, Friday, we take out the high, we'll sweep the low into the fair value gap. Very nice bullish reaction. I expect price to go higher come early early next week. All right. We may see price come back and tap this fair value gap once again and then go higher. We'll see, but the indications are bullish. Okay, you see how price uh, intersects the fair value gap with the market structure shift. All right, this swing here, boom, we go past it and then we go higher. This is we're looking for confluence, and that's a good confluence. That price will stay um, pretty firm as a support. Okay, let me go to the next one. Now, the Dow is something different. Dow is something different. I'm going to go down to the weekly. Let me take a peek here. All right, on the weekly, you can see we took out the. I don't know why I'm missing something here. There you go. All right. Well, that's actually on the monthly. All right. So let's just take a look at the monthly. I'm sorry. All right. So we take out the all-time highs. Price trades through it, closes high, trades through the previous high, closes high. All right. And then in one fell swoop, we come down and sweep all of these lows from the previous months. All right. Into this fair value gap. The fair value gap holds firm, holds firm, and pushes price back up, but we don't take out the highs. All right. And you see uh, there was a bearish reaction when we got towards those highs. All right. Price failed to go. This is a swing failure. All right. And, uh, but, but we don't take out the low of that previous month. All right. For the month of April. All right. May had some bearishness come into it in the last 2 weeks. And when we opened up June as a, forming this doji here. And uh, so far, the monthly fair value gap, bullish fair value gap is holding. All right. Now, if we go to the weekly, you can see that we were expecting prices to bounce once it got here, but that bounce did not take out that high. This is a swing failure. So price comes down and starts becoming bearish. What I mean by that? It starts forming bearish fair value gaps. All right. I was expecting price to hit that bearish fair value gap and then come down, but that could very well happen Monday, maybe Monday or Tuesday. It could hit that fair value gap. I need to start drawing. Hits that fair value gap and then sweep this bearish. This low resistance liquidity down here. All right, this will be a low resistance liquidity run if price just comes down to mitigate this fair value gap. All right, if it does come down here, will the fair value gap hold? That is the question. Why? Because it's been tested a number of times already, and every time it gets tested, it, it's taking orders, taking mitigating out of orders, and when there's none left, it'll pass through. You know, so uh, I don't know why this is still here, but we need to go to the daily to see what we're going to be looking at on the open of the of next week. All right, now price formed this order block here, and you can see how price had down candle and then pushed up beyond that bearish candle, forming an order block. Price comes back into it, and you see we have a bullish reaction, but it's not forming bullish fair value gaps, indicating that price supports higher prices, that the market supports higher prices. All right. So we are creating and generating orders. All right. We're generating liquidity. All right. That's what we aren't doing it. They are doing it. And that'll be this is a low resistance liquidity run being set up here. All right. Price takes, uh, uh, goes into this bearish fair value gap, but you see how it closes and opens and then closes on this Friday candle. it's below that fair value gap. It looks like price will make this run into this fair value gap. It looks like it may take this run out. This is the swing where it becomes the nearest draw on liquidity outside of this low resistance liquidity run, and we should see a big candle like this come into this fair value gap. Why? Because of all the liquidity here. All right. Could price go up higher and then come back down? It certainly could, but we're talking about the most likely scenarios, and uh, but we have to bear in mind that next week is CPI data and FOMC. So early in the week, price may go in the opposite direction of where it's going to go after the news. Bear that in mind. So with these swing low intersecting this fair value gap, I favor taking shorts from here because I think that's a high probability area to take shorts. All right. Thinking this one here will provide those valid short setups as well. So we'll see how things go come early Monday. I mean, early next week. All right. Remember the news that's coming out, right? Now, this is oil. All right. We're going to go straight to the monthly. All right. On the monthly, that's looking crazy. All right. On the monthly, you could see how price has been moving. We come down hard and then we dribble up, but we correct this whole move, right? That's cool. All right. But price doesn't trade through the swing highs. It just raids it, just sweeps it. And then we pull back into what? A fair value gap. This is on the monthly now. Remember that. All right. Price has been kind of sketchy here, moving up, moving down, moving up, moving down. What are we doing? We're starting to consolidate and getting into a narrowing um, price pattern here. And if I can just find out what that says, price is finding support in the bullish run. It may need to mitigate it again. Now we are all sitting on this fair value gap here that was created as price made this bullish order block. We come down and mitigate. We didn't get much of a rise. We tried it again, and then we're getting lower highs. So this is starting to look bullish, even though prices got a fair value gap under it. It's starting to look bearish, and and looks like this fair value gap will fail. All right, let's look at the weekly. I'm sorry, having a little trouble talking. I don't know why. All right. You can see there was the bullish order block being formed here. That big old institutional candle. Price came back to mitigate, and we are penetrating deeper and deeper inside of it. All right, we have the consummate encroachment there, the 50% of the order block. We haven't come near that there, and I'm looking at this this wick here, and this is the weekly. Bearing in mind, this is a weekly time frame. Inside this wick, there are bullish fair value gaps. You understand? On the lower time frames, I'm thinking this will probably see price come down. And can I get that? Thank you. Will come down probably to about halfway. All right, maybe down to the consummate encroachment, and then we're going to see price move up. We'll get a better look at this on the daily. All right, check my notes. Check my notes. Excuse me. What is that about? Okay. Didn't mean to do that. All right. So what do we got here? We have a bullish fair value gap. Remember that big old institutional candle back for the in the weekly time frame. This is it here. It formed an order block that price came back. That price left and came back to. I do not like the way price left here. Left this level. This was like you know, dribbled up. I would like to see a strong move away. You understand? But it did form a fair value gap, which validates all order blocks. In my view, it validates an order block. If I have an order block that I don't see, there's a fair value gap left behind by it as price leaves it. I don't depend on it. I don't look at it as a strong area to take trades from. All right, but you see how price came in and come on, man, did all this choppy expanding consolidation, but it finally broke out to the downside and now into this fair value gap. All right. Is that fair value gap going to hold? This looks very bearish. You always see this. You sweep the high and then you break structure to the downside. This should be your, this is your market structure shift here, right? And then it breaks down to the downside. You see it pull back up into that order block it left behind. All right. And there's a very nice size fair value gap that left behind. Price goes into that fair value gap, and you kind of expect that price would continue bearish. But here's the deal: there's a bullish daily fair value gap here, and if we check the uh, the weekly, you can see this. It's inside of a an order block, a bullish order block from the higher time frame. We should be looking at a bullish scenario from here. Yes, yes, we are definitely uh, we did break have a bearish break of structure on the daily. All right, but this is a daily fair value gap against a daily bullish fair value gap that is inside of a weekly bullish fair value gap. It's a higher time frame overlapping here. So I'm looking for price to continue higher. Yes, we also see a bullish fair value gap on the daily created from the lower full daily bullish fair value gap. So I'm looking for price. This is an indication that there is support for higher prices. Okay, so we'll see what is waiting for us on when next week gets here. But I'm looking for price to tap. Come on, man. Why do you do that in front of company? All right. Well, I'm looking for price to tap this fair value gap and continue higher. All right, into this bearish order block. We'll see. We'll see. We'll play it by ear, but we got to go by the price action. But I am definitely looking at a bullish scenario here. That's what I have going into next week. It may be bearish, but until I see this fair value gap fail, I'm not thinking bearish. All right. Okay. Do I have another one? Yes, I do. I know I do. Gold. Uh-oh. All right. I'm gonna stay on the daily here because it's pretty simple. Gold is bearish. All right. Look at that candle. All right. That is Friday's candle. It broke structure. It you see the market structure shift. You see right there, there is those series of up close candles, and then a dominant engulfing bearish candle. It formed a order block. I'm looking for price to pull back up into this area here and turn around and continue down to this fair value gap here and here. All right. We'll see which one it hits first. We're going to see it hit this one first, but I want to see what the reaction is. But and uh-oh, and silver is not very different. All right, I'm definitely not entertaining any bullish scenarios with silver. All right, you see how strong that bearish move is. So I'm looking for price to maybe come up and then head down. All right. I'm going to leave a link for part one of this weekly forecast at the end of this video. And I thank you for watching. All right. If you like, leave a thumbs up or or subscribe.